Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HORIZONROBOT-W interim report. Horizon Robotics offers a range of businesses and services through its two segments, automotive solutions and non-automotive solutions. The company's automotive solutions include Advanced Driver Assistance System Solution, Horizon Mono, Driving and Parking Solution, Horizon Pilot, with features such as Highway Pilot Assisted Driving, Automated Parking Assist, and Highway Navigation on Autopilot Autonomous Driving and Parking Solution, Horizon SuperDrive, Automotive-grade product for energy solutions, Horizon Journey, in addition to automotive solutions. The company also provides non-automotive solutions that enable device manufacturers to design and manufacture devices and appliances. The skyrocketing stock price of HORIZONROBOT-W. A year of unprecedented growth, HORIZONROBOT-W's stock price has experienced a remarkable surge, increasing by 175.5% year-to-date and 158.5% since its IPO in October 2024. This substantial growth can be attributed to several key factors: the company's successful Hong Kong IPO, strategic partnerships with major automotive suppliers, and market leadership in advanced driver assistance systems, ADAS, have all contributed to the surge. Horizon Robotics' dominant position in the Chinese OEM ADAS market, with a market share exceeding 40%, has been a significant driver of growth. Additionally, the company's strong financial performance, including a 68% year-on-year growth in the first half of 2025 and profitability in the past year, have boosted investor confidence. The successful fundraising activities, including a top-up share placement that raised an additional HK$6.38 billion, $815 million, have also provided a significant boost to the company's valuation. The positive analyst coverage, with UBS initiating coverage with a buy rating and forecasting 50% revenue compound annual growth rate over the next 5 years, has further contributed to the stock price appreciation. The diversification of Horizon Robotics' business through its subsidiary, Daigua Robotics, and new collaborations, such as the partnership with Alibaba-backed Hello Inc., have also played a role in the company's success. Overall, the combination of market leadership, strong financial performance, strategic growth initiatives, and investor confidence has been instrumental in the significant appreciation of HORIZONROBOT-W's stock price. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue grew significantly due to several key factors. The main contributors were the doubling of delivery volumes, increasing penetration rate of intelligent assisted driving vehicles, growing shipments of highway and OA-capable processing hardware, and strong sales growth of Chinese domestic brands. Additionally, the company saw increased adoption of intelligent assisted driving technology, advancements in technology, regulatory support, and partnerships with operating companies of robotaxi. Revenue decline drivers. On the other hand, revenue decline was driven by a few key factors. The main contributors were the operating loss, which declined by 44%, sales to HCT decreased by RMB-100 million, 88,000, and total sales to related parties decreased by RMB 324 million, 534,000. These factors indicate that the company's revenue growth was not uniform across all segments, with some areas experiencing decline. The company's debt level and interest expenses have undergone significant changes in recent times. While total borrowings have increased by 10%, non-current debt has seen a more substantial rise of 12%. This increase is reflected in the gearing ratio, which has risen from 41.5% to 51.2%. However, despite these increases, interest expense has actually decreased, dropping from RMB 3789 to RMB 378. The company's financial performance reveals a stark contrast between its automotive and non-automotive solutions segments. The automotive segment consistently demonstrated strong growth, with significant increases in both revenue and gross profit across the two periods. In contrast, the non-automotive segment struggled to make an impact, with meager revenue and gross profit figures that barely changed from one period to the next. These results indicate a clear disparity between the company's core business and its diversification efforts. Management is optimistic about the company's outlook, citing several key strategies for growth. The company aims to maintain its market-leading position in China's passenger vehicle market while doubling delivery volumes and increasing content value per vehicle. It also sees significant potential from overseas expansion, particularly with Japanese OEMs, as well as emerging trends in advanced intelligent, assisted driving algorithms and software. The company is investing heavily in cloud-related services and highway NOA solutions, which are expected to drive growth through industry-wide adoption of intelligent driving technology. Management is committed to innovation and open collaboration, pursuing a holistic approach that integrates hardware and software, and increasing investment in intelligent, assisted driving software. Overall, the company's strategy focuses on accelerating its transformation into fundamental infrastructure for the entire industry in the era of intelligent driving, while expanding its global footprint and deepening partnerships with leading international automakers and partners. The company's financial summary reveals a clear indication of its commitment to shareholder value. Despite an initial contradiction on page 25 stating otherwise, the conclusive evidence from pages 76 and 77 confirms that the company has indeed paid dividends. This demonstrates a proactive approach in rewarding shareholders for their investment. Concerns about inventory buildup and supply chain disruption exist. The company's financial summary reveals significant concerns regarding inventory buildup and supply chain disruption. Notably, inventory levels have increased substantially across all categories, including finished goods, plus 15.6%, working in progress, plus 43.1%, and raw materials, plus 369.5%. Furthermore, the low inventory turnover ratio indicates that the company is holding onto inventories for extended periods, with a cost of inventories sold significantly lower than the gross inventory value. These trends suggest potential issues with supply chain efficiency and management, which could have long-term implications for the company's financial health and competitiveness. That concludes the financial summary for HORIZONROBOT-W. Feel free to comment below, and I will be happy to answer them when possible.